At Griffin, we recognise an opportunity based on a need in the market for a strategy that has three key deliverables: sustainable monthly income, whilst generating the highest possible risk-adjusted returns through investing in secured bonds, ensuring your capital is preserved at all costs. The three key deliverables are: 1, the stable monthly cash income; 2, the highest risk-adjusted returns are extracted for your benefit; and 3, your capital is always preserved. It's the power of the three-pronged strategy that makes it so attractive for our investors, whilst providing comfort that your investments are loss remote. Where does GCIT sit within the income alternatives? Our measure at Griffin is of risk that the volatility of asset values, let's take one end of the spectrum, TDs, exhibit no vol, compared to growth assets or higher risk or higher vol equities. So now put it in perspective. Take an allocation to hybrids, whose characteristics exhibit an implied equity-like exposure. Because of this equity-like attribute, hybrids, which you would agree, would then tend to be more volatile. However, since we've listed back in May 2018, the asset values that we're talking about at GCIT have been rock solid. That is because GCIT invests in secured bonds, and they are structured to be loss remote. But also, which is really important for investors, is the average maturity of the underlying assets are less than 2 years. These higher income returns is why institutional investors keep investing in this asset class. This opportunity is now being made available to the retail segment for the first time. We said at Griffin we'd do 3 things at IPO. 1, we'd deliver sustainable monthly income. We'd also deliver you the highest risk-adjusted returns, and we would preserve your capital. As a fund manager, we must breed trust with our investors. And the best way to do that is being true to label. That is doing what you said you would do. We are proud to say, since the GCIT IPO, we've delivered everything we said we would, without exception. But it's also really important that we've constructed an investment portfolio that has achieved more yield for less risk than the IPO targets. Our investment style is a low volatility fund manager, which invests in an asset class, in our opinion, to be very defensive in nature. This drives a key strategic pillar in our approach. Capital preservation gets preserved through our stress testing. How do we do it? When you invest for income, at the same time preserving your capital, this forms our central pillar of the three-pronged approach to investing. The defensive asset class, called Australian RMBS, which is where we invest, has never suffered a loss if you held that investment to maturity. But it's crucial to have at your fingertips access to loan level data. GCIT has exposure to over 65,000 mortgage loans, dynamically updated every month as we collect, store upwards of approximately 47 different fields of information, including also payment information on every loan. So we're talking in the vicinity of 2.5 million data points every month we are capturing. But we also need to apply an independent, rigorous stress test. Which do we use? We use the APRA stress test. And this was formed and designed for determining capital requirements for the mortgage insurance sector. And it got labelled the probable maximum loss, the acronym being PML. And they define it as a 1 in 200 year event. So you can gather it's a catastrophic loss event is what we're stressing for. So what does this 1 in 200 year event look like? The cash rate hit the floor, call it 0.25%. And we are in a sustained recession period in Australia. Unemployment, double digits, 10% call it. The house price decline, the market value house price decline on average would fall circa 40% in this scenario. However, to pass the investment committee for these bonds to get into your portfolio, they must exhibit no loss under this PML loss scenario. But it's also got to carry a considerable margin of safety. We express this as a multiple of that PML loss scenario. So in sum, the GCIT objective are our 3 deliverables. Sustainable monthly cash income, whilst we're generating you the highest risk-adjusted returns by investing in secured bonds that each must pass this APRA 1 in 200 year event, ensuring you're getting capital preservation. Meaning, we can offer you a high and stable return whilst ensuring your peace of mind.